Parabanks, shadow banks, or as in India they are called non banking finance companies, they play a vital role in the lending ecosystem. Over the last year or so, we have seen greater regulatory oversight on the part of RBI with respect to NBFCs, restricting unsecured loans, penalizing them for charging high interest rates, stricter KYC norms, and so on. Umesh Revankar, Executive Vice Chairman of Shriram Finance, feels that NBFCs need to lend with greater responsibility. Listen to the full podcast with Mr. Revankar, where he talks about the NBFC sector and the challenges it is facing. So, thank you so much, Mr. Revankar, for agreeing to this podcast. So the NBFC sector has always been in the news. How do you see the evolution of the sector, and especially with a lot of regulatory oversight which is happening in it? How do you see it?
See, NBFC industry is playing a very vital role in India. See, if you look at the credit access to Indian, I believe around 70 to 80% of Indian business people, small business people, don't have direct access to formal credit system. When I say formal credit system, I say bank, and to also to some extent they do not have access to the larger NBFCs. They may have some access to smaller local NBFCs. So when there is shortage of access, or there is not enough what you call um, the method or reach to common man, then you always have that kind of a role somebody else will play. So in fact, that's one of the reason, it is called shadow banking, because when you call something shadow, that means it is in waiting. It is not that it is under dark. It is a system which is providing support when the absence of a formal system not working. So it has been like that for several years. But the it's called non-banking finance in India, but elsewhere it is called in some other name. Some call it as a para-banking, some call it as credit societies or lending institutes. So there are various names it has been called. But I think the NBFC in India has been playing very useful role. 20% of the credit today is given by the NBFC sector, including housing finance companies. So that means, and there are so many people waiting to come into formal credit system. Including people who are taking loan from local pawnbroker, maybe local money lender, and formal and informal both.
No, so recently we have seen the RBI cracking down on a few NBFCs, and there has been a heightened regulatory oversight, as Mr. Das has also been saying. How do you see that, and do you think it is creating, I would not call it obstacles, but do you think it is creating some kind of a problem in the sector in terms of operations? And do you think that regulatory oversight is okay, justified?
See, one thing, the way RBI has come out about on the various comments or statements made by the RBI is they were very clear in the beginning that loan given for speculative activities like gaming, cryptos, or maybe even access into stock market where you play on a speculation. These things RBI felt that it need to be curtailed, because most of the individual common man in India, they may not be financially literate. When they are not financially literate, they are likely to get into a kind of a trap by borrowing excessively. And later on, they also talked about the consumption, because borrowing purely on consumption. So when you borrow purely on consumption, that is like buy now, pay later kind of a cycle, you may get into a debt trap. So RBI wants to protect the interest of the individual common man who will get into easy borrowing kind of a situation and get over leveraged and not be the service. That's one part of it. And I think that's where RBI has come about it, and it is rightfully what they have been telling is, I believe is right. And also in the NBFC sector also, many of the fintech companies or the digital backed lending platforms, some of them formed a new way of assessing the credit of the customer and giving a remote loans. When I say remote loans, you do not have physical access to customer. Based on certain data information you have and KYC, you lend. Tomorrow, if they're not able to pay, then you don't have reach. Then you use the third party to create a reach, outsourcing your collection. And this, when you outsource collection to third party, sometimes it can get into some kind of a situation where the customer is not comfortable, or maybe there's excesses. RBI wants to prevent that. So RBI has been advising that you should know your customer. Doesn't mean that it should be just a digital. You should know how to access him in case of any requirement. So these are the few. I think it is a positive, and RBI need to caution whenever there is a heightened interest in excessive lending or aggressive lending. So ultimately, we all need to be very responsible person, and we need to make sure that customer gets the money in when it is needed, and he has the ability to service it.
Correct, yeah. In fact, in your article today, I was reading you also spoke about the sources of funds. Is the NBFC sector facing challenges in that raising of funds?
I don't really think that there is a shortage of funds, but maybe RBI is trying to tell the NBFCs that they should not be 100% reliant on the bank, because it puts extra burden on the system, banking system. They want NBFC to also raise money from the capital market and the other sources of raising resources. And they need to look at it. See, if you don't look at it, if you don't have a well-diversified liability plan, then you get into some kind of challenge. So that is, I think, well-intended to see that NBFC gets into multiple sources of resources rather than totally depending on banking system.
I've seen that Shriram Finance has got some of the highest FD rates. Do you think you'll be able to sustain it in the long term? How is that working for you all in terms of cost of funds?
You may be looking at the larger NBFCs and our lending rates, our deposit rates. If you look at some of the NCDs in the market, capital market, where it is more double digit and all, then it is much lower. Among the reported NBFC, maybe we are one of the company which gives little higher yield. But if you look at many of the small finance bank, we are even lesser than them. So that means that is the current requirement of the customers. Most of the people, depositors who look for additional interest are maybe people who are dependent on the interest income, like pensioners or retired people. All those people, they do depend on some. And when in case of inflation, it is their expectation that they need something additional to what typical banks gives FD. And our deposit growth is good, and we're happy to maintain the growth. And since our net interest margins are quite comfortable, and we are in a niche segment, we are able to pass it on to the borrower. We have no discomfort in the rates what we given. I think it is justified. And today my deposit rates are much almost on par with any other source of resources. Bank, capital market, to compare. Sometimes lower tenor deposit is much lower rate, lower yield than the other source.
Right. So inflation rates are still high, and the indications that we are getting, at least, that maybe the interest rates may not be reduced now. How is that going to pan out for the entire sector and the economy
My
in
take
general?
is my take is the inflation is still there. It's quite obvious that the interest rates will remain a little higher. And to spur the growth, if at all you want to reduce the rate, RBI wants to reduce the rate maybe after 3 months or 6 months or whenever they find it suitable. That is one way to look at it. So some benefit will be passed on to the end consumer so that there is comfort for borrowers to raise resources. But I think even if the repo rate changes, our borrowing cost from the banks and other sources would take time, 6 months to 1 year time. So there may not be any immediate relief for our borrower, at least for 6 months to 1 year is what I believe.